Good evening, everyone. Time for another silver update. This is the daily chart of silver crossed over the Dow 30 industrial average provided by netdania.com. You can click on the link below. You can see with the price print of 19.56, we're still falling in the after hours. Just a phenomenal smackdown on the heels of the Bernanke testimony. If you've been following the news, the state news media organs are bantering about the term tapering. This is a new term they've coined because they don't want to signal an abrupt end of quantitative easing, so they're floating their mind control trial balloons to see how the public and the markets are going to react to this new term, taper. Of course, the markets are doing anything but tapering. They're absolutely cratering. On my blog, I posted a chart of the futures. They were all red with silver down nearly 10% on the day, which is an incredible drop. Now, if we look at this chart, we can see that the major divergence between the stocks and the silver began right after the election last year. And we can see that stocks pretty much went straight up. Silver pretty much went straight down. So this is the most massive divergence probably in history of these two markets. Maybe there was something like this in the Great Depression. But now we're starting to see the stocks turn down as silver is still falling. We can see how dramatic that type of thing is if we look back in the past and see how closely matched they were. Now, they certainly don't have a very close beta, which means they trade together, but they certainly have nothing in the past to match what we're seeing here. So clearly this thing's going to have a resolution. Will the resolution be stocks going like this and silver going like this? Possibly. That would probably put, at the current pace, would put silver at 0 in 10 days. So I doubt that that's going to happen. Or are we going to have a resolution like this where silver turns around and stocks fall? Or will stocks turn as well and just go to the moon as we go into some hyperinflation? Have no idea. Your guess is as good as mine. Now, this whole thing started with the beginning of the breakdown in the 10-year note. This is a chart from finviz.com, and I put a trend line on here. You can see the trend line, the bottom of the trend line actually starts right at the very bottom of the financial crisis in 2008, and the stock market rally, of course, doesn't happen until midway into 2009. But you can see that it's a very steady trend line in the rise of the 10-year note, and now we are crashing back very, very rapidly towards this line. The question is going to be what happens when we get to this line. Now, as you know, Bernanke spoke and he hinted at this tapering, and that is apparently what caused this whole thing, although the sell-off in the metals last night began in Asia. So and we had that spike to 25% in short-term rates in China. So we're starting to see tremors around the world. Now, if you remember, in the 2008 crisis, if we pull out, go all the way out to the weekly, this is the silver cross, but the gold cross is more dramatic. So let's go ahead and pull up the gold cross with the Dow instead of silver. But if you'll remember, there was a point where in the midst of the financial crisis, the price of gold stopped falling, and started to rally as stocks continued falling. Gold actually bottomed around October of that year, and stocks bottomed later in March. But so in that scenario, we actually saw gold stop and turn around first as stocks continued to fall. Will we see that this time? I don't know. But the fact that we can have one man speaking and pretty much cause collapse of the world stock markets and collapse of the commodity markets all at the same time with interest rates exploding higher, if that isn't evidence that the current system is completely broken and needs to be replaced, then I don't know what is. The fact that one man, and not a very competent man at that, could have that kind of power over the economies of the world tells you that our financial system is completely broken and has to be replaced with something better. So let's go over to some questions of the night. Before I do that, I want to talk about this story that hit on Zero Hedge after hours. Now, we had the CME hiking gold margins by 25%. Now, perhaps we're going to have silver margins hiked as well. Now, the justification that they make for that is that margins are raised to decrease volatility. Now, most of you know that that's absolutely silly, because if it were volatility caused by people who had to borrow money to put on their positions, then that would be somewhat relevant. And of course, that is the case with the longs, but you have to remember that the shorts in the precious metals market, pretty much everyone agrees now that it is the Federal Reserve operating through various proxies. So to even act like margin requirements have any impact on this price action at all is absurd, because the people who are shorting and crushing the precious metal prices are people who have unlimited funds because they have a printing press. So that's just another stupid thing, just to show you how irrelevant and idiotic the CME group is, and of course the CFTC and the rest of these buffoons. And that's what they are. They're utter buffoons, and they're becoming a worldwide joke. And of course, they'll go down in history and live in infamy as being corrupt regulators and corrupt market operators that oversaw the greatest market manipulation in history. So they're obviously not going to get away with it in the long term, but right now they are getting away with it. So let's go over to some questions. The first one from Ivan. Rising bonds. Hey, Brother John F., with rising bonds and the Fed not increasing their purchasing. Meanwhile, Peter Schiff's saying that no one will be buying bonds since they are the last reserve. Do you think that banks with their huge $3+ trillion of fresh printed money could jump in and save the bond market? Well, that's a good question. My understanding so far has been that the deal that the Fed has cut with the banks is basically that the Fed will give them money at zero interest rates if they turn around and buy the bonds, thereby propping up the unsustainable deficit that we have. Again, with the Fed hinting at this tapering, with the Fed hinting at their saying as their stated reason that the economy seems to be doing better. Apparently the economy doesn't think it's doing much better once it hears that, because immediately everything crashes based on those words. But obviously it's the Fed who is buying bonds, and perhaps the Fed is slowing some buying of bonds right now, and that's why we're seeing the prices fall in the 10-year note as they are. Maybe the Fed is hoping that a little bit higher interest rates will bring in some buyers. I think that they're going to find that it's going to take much, much higher interest rates. And my guess is that we're going to see somebody, if not the Fed, then somebody in government do something that will quickly hint that there may be a reversal of this tapering policy and another QE. That just depends on how steep the correction is on this thing. The next question, well, I kind of addressed that. So we'll go to the Perth Mint here. Hey, Brother John, I hope you and your family are well. Been trying to stack silver bars from Perth Mint, and all I'm getting is currently out of stock. Why do you think that is? Are they really out of stock or simply not wanting to sell at these prices? Thanks for all the work that you do. Well, the Perth Mint is not very quick about getting stock available, especially for foreigners. I don't know the truth of all the rumors that I've heard. My understanding is that foreigners can't buy directly from the Perth Mint at all, but that someone in Australia has to source it and then sell it out. I know I follow Perth Mint products very carefully on APMEX, Provident, and Gainesville, which are really the only three ones that have the products that I like in any amounts of volume. So my best guess is that Australia probably doesn't really want to see much of its silver go overseas. Now we know that China and Russia pretty much don't let anything go overseas because they're trying to stockpile as much precious metals as they can for what they see coming, and I don't know if what they see coming is a world war, a world economic war, the end of the petrodollar standard, a new international currency. I don't know, but it seems that a lot of countries are realizing now that they probably want to keep as much of that at home as they possibly can. And last question is from Silver Tin Man. Relative abundance of materials in the Earth's crust. Brother John F., I truly appreciate all you do for us, your dedication, hard work, knowledge, and insight. I use the relative proportion of the elements in the periodic table in the Earth's crust to compare the current price of each material with the current price of silver in light of the relative abundance of each. For example, I projected what the price of silver should be relative to the price of iron in accordance with the amount of each that exists in the crust. There are 41,000 ppm of iron, I assume that's parts per million, and 0.07 parts per million of silver. The price of iron is 0.0815 per pound, and the price of silver is $352 a pound. If iron is fairly valued, then it seems silver should be valued at $2,983 an ounce. On the other hand, if silver is fairly valued, then iron should only cost about 0.0003 per pound. Something seems amiss. This type of analysis can be done on all the materials in the periodic table. Similar discrepancies appear as further examples based on magnesium. Silver should be 26,000, titanium 15,000, magnesium 925, aluminum $60,000 an ounce, zirconium 2,700, tungsten 2,900, neodymium 1,700, gallium 2,298. My question is, do you know of any such analysis that has been done on a broader detail that shows how such material prices relate to each other? I suppose many factors are involved, such as industrial usage, extraction costs, etc. But the point that cannot be lost is the usefulness and important fundamental chemical and physical properties that silver has for our daily lives. Can you please address this analysis and offer more insight? Thanks again. I truly appreciate all that you do. Well, that's a fascinating analysis. I've never seen anybody approach it from that way or do that analysis. I think the iron one is very, very clear. Either iron is tremendously overvalued or silver is tremendously undervalued. I don't know how you can come to another conclusion. Now, there are some other aspects to it. You have to remember that silver is also used as money, or at least traditionally has been used as money. But again, I think that would be a plus for silver. So I really have no explanation for this except for the fact that I think that this is just more evidence that silver is the most undervalued investment in the history of the world right now at this time. Now, it makes sense. Silver is the absolute enemy of the central planners, the central bankers. Their entire system of central planning and central banking is collapsing now around their ears. They can't stop the collapse. They can only try to put it off. They can do massive attacks like they're doing right now against silver. And we're now down to, in the aftermarket hours, we're down to 19.44. So if you're worried that silver will go to zero, I guess we don't have that far to go. I'll be very happy when we get near zero, because then I'll just simply buy all the silver in the world, and that'll be the end of the story. So let's look at some silver here. This is a Perth Mint coin, and as you know, Perth is my favorite. This one is going to be my top pick for the night. This is the one I like the best. It's got price reduced. It's a hot item. You can see it's selling over there on APMEX for $23.07. Well, let's refresh it. Now it's down to $22.98 a coin. And let's check to see how many are left. They have 63.02 of those left. This is a fantastic buy. I'm probably going to watch this one tonight and tomorrow, looking possibly to pull the trigger. I just never thought I'd see the opportunity to pick up these fantastic Perth Mint coins. I'm just about positive that you're buying this for less, probably significantly less money than APMEX paid for it. I'd be very surprised if APMEX would be able to turn around and source them from the Perth Mint again at such low prices. But I could be wrong. Nevertheless, this is going to be my favorite for the night. I'm going to be watching it closely tonight and tomorrow morning to see what happens to the volume of these, and to see if I can pick some more of them up with my dry powder, what little I have. So here we are at 19. Let's see if we can get down to 18. We're going to be near a bottom here soon, because we're either going to bottom or we're going to go to zero. And if they're going to try to take it down to nothing, I'm afraid that they're going to have to collapse the entire system. We're going to see 2008 all over again, but tenfold. And that will be a lot of fireworks, so get your popcorn. And we'll talk to you next time.